all of this. But broadly speaking and putting everything on balance, South Africa's agricultural sector is largely healthy, set to grow by at least 10% this year, and some are even more optimistic than us, like the BFEP saying we could grow by 13%. So that's good in as far as a broader level, but there's a lot of things that are still threatening the sector, and the mayor, as the minister, spoken to those, things like the farm security and rural safety. Those are some of the things that are consistently a threat to the sector. But in as best as we can tell from the pandemic, we're still in better shape. Now, we were worried also about the exports, because as South Africa, we are an export-orientated agricultural sector. We export about 51% in value terms of what we produce. So we were worried about the disruptions there. Ports of Cape Town and elsewhere, they did in various times experience some bit of disturbance. But in as best as we can tell from the volumes of data that we have already have for the first 2 quarters of the year, exports have held on fairly tight. As you see on that dark bluish bars that you see on the board, you will see that at least exports have been solid in as far as the second quarter. Imports have slided somewhat, and that has a lot to do with the domestic demand rather than on the decline in import. Certain industries that would have brought in certain commodities for processing them, we've seen them scaling back somewhat, which is why the green line of the trade surplus, we saw it improving there. But the general point, perhaps, on the slide is that trade is still ongoing relatively well in South Africa, despite the glitches that we did experience for a certain period of the lockdown. And I think from here onwards, going forward, we can only expect that the exports will grow. But the key threat that we are all looking at now is to say, is the global demand going to remain as solid as it is? And we worry onto that. If you look, for example, on these IMF estimates about what the economic conditions will be or economic performance in the major regions, you will see that set to decline notably, that you can just focus on that 2020 section. And for sub-Saharan Africa, a decline of about 3.2%. But globally, major countries that are South Africa's trading partners are set to underperform this year. Now, the question we all sitting with is that what will that do to commodities demand going into 2021, particularly for high value products? If you think of the wines, you think of the beef industry, those are some of the commodities that we're really worried about, but we're yet to see what that will look like. We're particularly concerned about the intra-trade in Africa because about 40% of South Africa's agricultural exports, they go to the African continent. And I think Benny alluded into this point earlier. And obviously there, that's where we are seeing massively this year that the per capita income GDP for various countries is gonna decline for at least the next 2 years or so. And the question is that, will they still be able to participate on trade South African products that we've been selling to the continent for so many years? But that's some of the things that we think we will see the effects of it much more clearly in 2021 going forward. But that's an important market. In any case, the other exports that we really, from a South Africa perspective, looking at growing is the likes of China and India. And the minister spoke to this point in his remarks because that's where we think that there is potential. There is potential for growth. And obviously, we're all part of this BRICS region. So we think that strengthening agricultural trade with those countries would be much more important in addition to some of the activities that we already do. And I think then the next question that I had is really about to say, on the backdrop of all of those things that we have said, what policy intervention has South African government actually really put in place to somewhat support sector? And I think there's really about two major ones that have happened. The first one coming from the central bank, not directly for agriculture, but across the economy. We think that that reduction of the interest rates by 300 basis points was really important for a sector like South Africa's agriculture, which is highly indebted with debt levels just encroaching below 200 billion rands. I think if you were to use, for example, the 2019 figure of 1.8 billion rands onto that decline on interest rates would mean that South African farmers, at least on debt servicing costs, they have been able to save about 5 billion rands over the next 12 months or so. So that has been a positive on a debt servicing side. And I think the other important intervention was obviously the Department of Agriculture, which was directly for the farming sector and specifically for smallholder farming sector of the 1.2 billion rand, which prioritized certain sectors like poultry, livestock, vegetable, to say those will be assisted, and obviously some of the proactive land acquisition strategy programs, which is part of the land reform farms in the country. But in designing the second point, we do think that it was perhaps maybe rushed and not properly designed. We think that putting that money on a blanket statement for those industries might have missed some of the industries that actually needed the relief more. Because if you were to do the clear analysis, like we have just showed on that slide, that the industries that felt the impact of the pandemic a lot from a South Africa perspective are those that were not classified as essential. But anything else that is essential, yes, there might have been glitches, but overall they've performed relatively well. And this is clear in one of the studies that we have actually done with Professor Johan Kirsten of Stellenbosch University and Freddie Mayer also at Pretoria and BFAB. And we've looked at the pathway of the virus to South African farming businesses. And we thought that there's really about three pathways of this. It's the virus per se, where we think the impact of that has been really negligible on the sector. And it's the panic, which translated to lower business and consumer confidence, which had a large impact in as far as the demand for some of its products in various stages of the lockdown. And the regulations on itself, which you think that they had a much and a more serious impact, particularly for the provinces that you are in, that wine industry and all of these other industries that we've listed into this. And just on a quick few slides, for example, if you were to look at South Africa's grain and oilseed industry on various stages of the lockdown, which we show on that slide, and selected a few commodities, you will see that the impact has been pretty much minimal. Therefore, with the limited funds that you have, you wouldn't necessarily direct it for those industries that we show. And secondly, if you look at the horticulture sector, various stages, there was an impact. And that orange one, that's where the impact of that low business confidence really had an impact on the demand. And obviously the closure of restaurants for certain levels also had an impact on the demand and the pricing, and thereafter the profitability of those crops. But for wine, grapes, and wine estates, you will see it on the red. That's where the major impact will be. And we think that the support should have been tailored to support these ones that are on the red and also on the orange colors of this. And the same is true if you were to look at our livestock sector. Yes, through the demand and the lower pricing, there was an issue. But as we progressed to lower levels of easing and opening up the South African economy, that became less pronounced. And that's how the privatization of the support measures it should have actually been designed. And now, towards the closing, the question is, what can agriculture do for South Africa's economic growth after the pandemic? And we think there is a role that agriculture can play. And this is the point that the previous speakers also mentioned through its ability to absorb labor with high unemployment that we will be having, and also bringing economic opportunities. And we think that the provinces that should be priority in South Africa is KZN, Eastern Cape, Limpopo, and Mpumalanga. Those are also the provinces with higher levels of poverty, which you see on the red on the map, but also at the same time, those are the provinces that still have a large tract of underutilized land. That would think will also be, and obviously some who are in South Africa, you might have seen also that there's even additional land parcels that the government will be attempting in the next few weeks to release also in addition to that which we have already highlighted there. But for that to happen, obviously infrastructure investments is going to be one of the important things that will need to happen. And South African government is somewhat speaking onto this point through its infrastructure fund within the presidency. And also improvement of the land governance in the former homelands is going to be one of the important things, because for investments to happen there, the governance policies and giving on long-term tradable leases where possible, that would be one of the important issues. And the local government delivery is going to be important on ensuring that at least basic infrastructures are running. And we think that those are just among some of the things that will be possible. But at the core of all of this, the PPP approaches will be important. And this is why South Africa is discussing these master plans that we're talking about. Ideally, they are a good concept, but obviously we still, as industry and government and many stakeholders, have our own differences. But I think that if we can put all of that together, it can be something that can be useful into this process. And we already know which commodities we can prioritize. These slides made available, but what this shows is just the blue bars of which industries have been growing the most in South Africa and which ones could be labor intensive, and they will need to be prioritized for that process. And now, as my last slide, in all of these things that we'll do, one important thing in South Africa, which we're still stuck with, is saying we need to make sure that as we grow, as we think of the sector, the concept of transformation is important. What this slide only shows you is the minimum participation of Black farmers in all of the fortunes that we've doing over the years. If you think of maize in South Africa, Black farmers only produce on a commercial level about 5% of that, soybean 3% of that, citrus 2% of that. It's only in cattle where they are at 34% and wool 11%. Now, to grow and have a stable country, we need to make sure that the pie grows, those numbers get better. Those people that are currently at small scale farming, they are given an opportunity to commercialize where possible, which is where then these previous points that I've mentioned of infrastructures, of land governance and all of those things, and blended finance, which even Nerija spoke on earlier on, they assist on making sure that we actualize all of those things. But let me stop there for now. Thank you.
Thank you so much. We are having a serious problem in terms of time, but let's see how we do. The next speaker is somebody who, so we've heard people from government, from business, from associations talking about the whole agriculture sector. But our next speaker is somebody who's actually on the ground. It's Mbali Nwoko, who's a commercial farmer from Johannesburg, and it will be very interesting to hear Mbali's views also. Over to you, Mbali.